So we just got word that the founder of Under Armour is coming back as a CEO, and I don't think this is the first time he's done this. But before we look at the article, let's quickly just look at the monthly chart. And as you can see, price attempted to come down to this zone several times but could not, which tells me that yes, you do have support, but more so you have strong buyers waiting for price to get down to, say, the $5 level. And truthfully, I could button up this zone to reduce the risk. I'm just going to leave it at $5 though. I can button it up, meaning you have a rallying price that's base and candle and then a rally higher. So you could reduce your risk. Let's just do that to about 50 cents. Making this roughly 575. All right, before we look at the other time frames, let's look at the news. So Under Armour announced on Wednesday its founder, Kevin Plank, is set to return to take the helm as CEO starting at the beginning of April, succeeding Stephanie Lennartz to steer the athletic apparel company through a challenging backdrop for sportswear market makers. Now, Williams Trading has declined its stance. This is an analyst on the sportswear retailer to hold from buy, cutting its 12-month price target from $8 to $11, taking a spot on the sidelines as it awaits more information about the company's strategy. They believe that Ms. Lennartz had been taking a measured approach to reposition the Under Armour brand in the U.S. and build upon a developing strong position in international markets. Again, an analyst at Williams Trading said, in a note adding that it's unlikely to hear from the new CEO before fourth quarter earnings updated in May. Now, Mr. Plank's return is a clear signal that Under Armour strategy isn't working and supports our field work that their KPIs continue to deteriorate in the current quarter. This is now according to an analyst at Evercore. They believe the most likely scenario Mr. Plank will pursue will include efforts to accelerate a return to North American revenue growth. They think will add significant risk to the brand longer term. So this is pretty bad all around. Again, I know there's support here at $7, but and you could go long as that has worked in the past. You go long, look for a quick target, right? Because price is really still declining, although basing in recent years. All right, let's go down to the weekly chart. All right, so pretty much price has been sideways since the last 12 months. Now I wanted to analyze this rally that we saw at base and candle and rally out on the monthly chart. And not in love with the price structure. I would give it more points if we saw a move higher on strong volume, but we don't. Volume is below or at average at best. But nevertheless, you have to respect this monthly zone. And if you button it up against the resistance, support, When you add in other confluences, it strengthens a level potentially working out, a setup potentially working out. Now I will look at things on the daily chart, focusing on this range bound price action. As you can see, prices are below the 200 day, 100 day, 50, 26, and 13 simple daily moving average. Yeah, don't really see anything exciting or levels of interest, with the exception of, again, just kind of strolling back out. When prices tend to get down to, say, $7, we get a bounce. When prices tend to get up to, say, $9, you get a rejection. So personally, I want to see a candle close on the monthly chart below 7, which would tell me potentially that price is going to move lower, which tells me that you should put this $6, $5 level on your charts and just monitor how things transpire over the coming months. Thanks for watching. Subscribe. Please like the video.